Hi, welcome to the market alert for Wednesday, the 28th of June 2023. So stocks saw as strong data batters bonds and bullion. Sparks hawkish shift in rate hike odds. Again, here we go. Stocks rally after strong data ahead of Powell. He's speaking later today. And economic news, like I say, we've got Lagarde out at 2:30 p.m. and also Bailey. And also Powell, it looks like, is a collaboration between them all today then. At 4 p.m, Lagarde speaking again, so it's all central bankers for today. So look at the market's reaction yesterday. Markets up very strong after the new home sales news and other data during yesterday. So let's have a look at that and kick off with the Dow. So in the Dow, yesterday you can see the market moving strongly to the upside, coming off that 78% retracement and the 50 EMA, and also tucked in there we have a crossover as well. We've been oversold for the last few days, so the market due for a move back to the upside. In the 30-minute chart you can see this, we had a move down as we normally do, and then the market coming off the BRN there, oversold with the momentum starting to shift to the upside, and it was just a one-way bet after this. The move for yesterday in the Dow from low to high during its cash session was 322 points. Not as much as it looks, but nonetheless it's still a good move to the upside. Speaking of the Dow, the implied volatility for the Dow has made a new low as well, down at 10.6. So we're down in the sort of realms of the, 2018, 2019 sort of levels now for the implied volatility. So I think this is going to remain the same throughout the summer unless something else comes along. Normally everything stays fairly quiet as they go on vacation, etc. And then it'll kick off in the autumn. But the lower the implied volatility goes in this market, then the bigger the correction will be when it does actually turn up. 10.6 there, very low. That's the post-COVID is the lowest it's been, heading down towards 3 to 4 year lows there for the implied volatility. In the German DAX, also oversold, crossed over on Monday. Tuesday the market continued to move to the upside, and we've got to take out that 50 EMA and the 38% retracement on the upside. I've also got numbers on the downside as well. It's important not just to have one opinion, just in case the market does come back and do an 89% retracement before moving to the upside. It's always important to keep this in mind. Also, yesterday's high is going to be important as well for this market. So let's look at this in a bit more detail. Yesterday, the obligatory sell-off, which we saw, took a lot longer though, until more or less the Dow moved up 1330 here, so it continued lower. Normally, say that we came down until what time was this? 10 a.m. and then moved to the upside about 25-30 points before another correction down, and then the real buying coming into the market there with demand and the green bar there, and then just following the Dow to the upside. Big move to the upside in the afternoon. It's rare to see that sort of thing, so 150 points sort of number, I think. Let me just double check that just for clarity. Let's have a look. 169, so a bit more. So in the 5-minute chart, let me just drag this over to the left. Have a look at yesterday's move in more detail. And as I mentioned in yesterday morning's alert, that the market would attack Monday's high prior to the cash market opening. And you can see that's exactly what it was. We're recording the alert around this time, and they went for the high. And then as soon as they got to the high, the weakness started to come in. We got to the cash market and down she came. Had a bit of a breather at the DP, found support, but then broke it, and then had a bit more support before trying to get back above. Ran into problems at the 200 MA. Final shakeout. Let's if you can't get the market up, then get rid of the stops on the downside. Run the market down. Oversold. We got the crossovers on the way down there saying that they were trying to bring the market back and eventually they did, which you'll see there. At the moment we're nowhere near yesterday's high. Let me just reset the chart, it's a bit quicker, so you can see that well, say not too far away actually, about 25 points at the moment, 24 points. So again, I wouldn't be surprised if they don't run the market up. When the futures market opens, they tend to have the freedom just to run the market up to yesterday's high, which you'll see there in the 30-minute chart as well. But at the moment, way above the DP, the close, the 200 MA in the 30-minute, and also the 5-bar moving average. There's only a couple of red bars there overnight as well, where markets had a bit of weakness, and each time it's been followed by further green bars. So looking quite good on the upside there at the moment until we open, where the pattern, like I say, at the moment seems to be moving the market down. Watch the 78 and 89 levels there as well, but I'm sure it's going to have no trouble getting up 25 points from where it's currently trading, or 4 points to attack the high. Bit of a slow week for me this week, as I'm doing other things, recording videos and sorting all sorts of other things out at the moment. 124.20 and 455 on the profit factor, and 67.33 on the win-loss ratio there. And in the S&P 500, this moving to the upside as well, stuck at the 50% retracement yesterday. 30-minute chart, again you can see we're doing barely nothing on the downside. They bought back in, you can see the volume there, market ramped to the upside. FTSE 100 also managing to stay above Monday's low, moving up overnight as well. These are the upside targets. Again, it depends on what Bailey, Lagarde and Powell say today, whether it's going to be helpful to the market or not. Down yesterday for the FTSE, and then again finding some buying coming into the market, moving prices back up. Where did they move to? Well, you can see they went up to 78.89, bang on 89 there actually, and then back down, and then just trying to move back up to yesterday's high there. We'll see whether that can be achieved at the opening at 8 a.m. And in the GBP JPY, let's have a look at the monthly. We're still heading for the 89% of retracement, 187.98, and in the daily chart up again yesterday. So in the 30-minute chart, we saw the market moving sharply higher with the stock market yesterday afternoon. In the pound, stuck in a sideways range in the daily chart there, and in the 30-minute chart, very choppy again, probably waiting for Bailey today to get its next direction. US dollar down again yesterday, up on the overnight. Didn't make any difference to the metals. They still got monkey hammered. Again, no surprise there really, is there? Let's have a look at those. Kicking off with silver, we managed to move up to the 200 MA and the 50% retracement where it found resistance yesterday. 30-minute chart with the news, bang. Down we came, but managing to make up a bit of ground overnight and trading back above the DP. Back to the daily chart, we need to take out the 50 and the 62% retracement. But at the 62, you've got that 20-bar moving average and the 50 EMA to actually take out as well. Gold remains lackluster, stuck in the sideways trading range there, which you can see bouncing off the lows of yesterday. And again, you can see how they hammered the price of gold, because they're still buying and accumulating gold in all of the central banks at record levels. So keep suppressing the price. There's not much chance of moving back up at the moment. And finally, in the gold-silver ratio, you can see that this is still coming down because silver's outperforming gold at the moment, a bit stronger percentage-wise as far as the gains are concerned. Okay, that's it for this one. Let's see what the Three Musketeers have to say today and what impact it has on the market. Keep an eye on that one. Let me just double check the time again, just to remind myself, 2:30 p.m, just as the Dow opens for the afternoon session. Okay, that's it. As ever, thanks for watching. See you in the next.